this video, let's explore the tick volume, the indicator that it measures, I would say, market activity by measuring the price changes, the ticks that actually happen within a given period. So unlike the classical traditional volume indicators that measure the number of contracts or shares that traded during the given period, the tick volume indicator comes to measure the real data happens within the given period by measuring the price changes. How many ticks actually happen in this period? And as you can imagine, the bigger the number, the bigger the participation of the traders, the buyers and the sellers is. And that shows that the market is active. The buyers and the sellers are there, and when their buyers and sellers are there, that's our time, the traders, to be there. So how does it work? Where do we find the indicator? So we go to the indicator section, volatility, tick volume. Okay? And you can, of course, predefine everything you want, settings, line visibility, and levels. And once you click it in, this is what you will get on the chart. And the increased periods, that means more participants are in the market than usual, than average. Okay, and you can see the numbers increase here, more participants. I mean, not specifically buyers and sellers. You can know that. It just shows more volatile markets, more money flows through the market. And that's the indication for us that something happens. And that's where we will want to be. It also could indicate when we are about to enter some consolidation or when reversal even take place. So when increased numbers are happening, when there's kind of volatility is bigger, more participants are in, but also it could help to identify potential reversals when the market is making the higher highs. But you can see lower highs build up on the tick volume, less and less interest happening by the traders. That could be the indication that the trend could shift and change. This is also a very good indicator to confirm breakouts. Why? Because when a breakout happens, and it happens with increased numbers of participants, it's a great indication that this particular participant could be the ones that will drive the price in the breakout direction. For example, we created the bottom here, low, high, low, breakout. And what happens with the indicator? It makes higher highs. Great indication that these participants could be actually buyers. Another way I love to use this indicator personally in a multi-timeframe variation is, for example, look what happens here. It kicks up, it breaks this, it was the decreasing highs, and then boom, higher highs. Look what happens here suddenly, right? Higher highs. Indication that something happens here. So I look at that place, and if I go to the lower time frame, this was daily, so for example, 4-hour chart, look what happens here at the same time. This was the bottom. The daily increases, but here, from decreasing highs, also higher highs. Fantastic indication for a breakout confirmation, which usually brings great opportunities to join this momentum and enjoy the rides. Traders love to combine this indicator because it's not directional indicator, it's more volatility, where the momentum is, where the buyers and sellers actually are. Traders love to combine it with different indicators, moving average, MACD, RSI, for the combination trend with increased volatility. Want to learn more indicators? Want to learn more trading tricks? Make sure you follow this channel.